90% of traders are not profitable. So my question to you is, why are you doing what the 90% of traders are doing? So by logic, wouldn't that mean that we have to do what 10% of the profitable traders are doing in order to become profitable? Now we'll go over this. Why are most traders, or almost basically all traders, are failing to begin with? They don't understand what it means to be a trader, and I guarantee you, whatever you think a trader is not what it actually is. They don't understand their edge, and they make trading very complicated. Now, this is very important part. They are working towards the right goal of becoming financial independent and basically having freedom in their life. However, they are working towards that goal with the wrong approach, which is basically why they're not profitable yet. And here's the thing, trading needs to be simple. If trading is not simple, and if the system that you are trading right now is not simple, that you can basically break it down into 3 simple steps, then your system will fail you sooner or later. Why? Because if you have 10 different steps, 10 different things before you're going to take a trade, then there's basically 10 different stages where you can mess up. If you have 3 stages, or let it be even 2, then there's only 2 options where you can fail, either in stage 1 or stage 2. But if you have 10 different of them, and even if you're going to mess up the 9th of them, or the 10th step, then the system will not fail you, but you are failing the system. Firstly, because you are putting way too much things into the system, and secondly, simply because it's just too complicated. Now look, trading is already one of the hardest things that you can possibly learn. But trading is also just like any other skill, it takes practice and time. Now the reason why trading is a little bit more special compared to other skills is that the more time you're going to spend on trading, actually the worse your results get. But the less time you're going to trade, the better the results are going to be. Now when you're going to learn an instrument, that's not going to be the case. The longer you keep on learning, the better you'll get to play the instrument. The longer you'll pursue a sport or a different topic in your life, the better you'll get at it. But in trading, it's the complete opposite. You're working backwards when you're going onto the live charts over and over again. So every single skill has these so-called sub-skills. So basically, there's this major skill, which is basically trading and achieving profitability. But below this skill, there's risk management, psychology, and your strategy. So before calling yourself a profitable trader, you would have to master these sub-skills, as I like to call it, which is going to be psychology, strategy, and risk management. Now, out of these 3, there's one specific one, which is the killer of profitability. Now look, trading is a mind game. Whoever told you that trading is all about strategy is wrong. However, your psychology skill is very tied to your strategy. And we will go very deep into that very shortly. The reason why you're losing is not just your psychology, it's not just your strategy, and it's also not just your risk management. It's these 3 things combined. But ultimately, which that leads to is your psychology. Because if your strategy can lose 5, 6, 7, 8, or even 10 times in a row, which we will look into shortly, then who is going to be profitable with this? Certainly not me. There's nobody going to be profitable with a system that is going to lose 5 times in a row. Now, why is mastering psychology so hard when it's literally just not pressing any buttons? Now, what causes a bad psychology to begin with? It's when you lose a trade. That's most of the time the turning point. Most of the times, before you haven't even taken a trade, you're not even that nervous. So I get it. Even if you are nervous while taking a trade, so you have not even lost a trade, you have not won a trade, I get that. But the real reason when things are really going to get messed up is when you're going to take a loss. Certainly you are not getting into a bad psychology environment when you're taking a win. Now also that can lead into overconfidence. But overconfidence is pretty overrated. Now overconfidence is also a big part in trading. However, most of the times you'll simply lose a trade because your win rate is not high enough. And we'll get into that now. And I'm going to explain this to you in a very uncensored way. The reality of your bullshit risk to reward is keeping you unprofitable. Let's just look into it. Now, most of you guys are claiming that you have a 30% win rate or a 40%, 50, 60, 70. Let it even be a 50 or even 60% win rate, okay? Most of you guys don't even have the data to back this off. But let's just say this that way. With a 60% win rate, you can expect having 6 losses in a row after 50 trades. Now, this can even be way more. If we were going to take 100, 200, 300 trades across the entire year or even 2 years, then you can even expect with a 50% win rate, you would think that, I'll lose 1, I'll win another, I'll lose 2, then I'll win 3. But this is not the case. This is not how trading works. And this is certainly also not how probabilities work. You will eventually, with a 50% win rate, mathematically, not just pull out of my asshole, lose 10 times in a row, sooner or later. So what is that telling us? By choosing a high risk to reward, you're choosing failure, because if we look above, a high RR means a low win rate, big losing streaks, bad psychology, you have lost money. That's the cycle you are in right now. A low risk to reward means a high win rate. A high win rate means winning streaks and not losing streaks. Would you rather have winning streaks or losing streaks? Which leads to a good psychology and then big money, of course. And this is essentially exactly what I have explained to you earlier. If you are going to do what 90% of traders are doing, then you will just lose. But if you're going to do what the 10% of traders are doing who are actually profitable and not just bullshitting you, then most likely you'll also get the results. This is exactly why I like this picture so much. Nobody has a 95% win rate in trading. That's why it works. That's the exact reason why I am profitable for years now, and anybody who is trading a higher risk to reward is still not profitable. When I just started out trading, there were guys trading a higher risk to reward and laughing at me because they think that, well, this is complete bullshit. You're only making a couple of pennies when you're taking a win. What all matters in the end is who is going to be profitable by the end of the year. If you are not profitable, then you are not a profitable trader. Simple as that. If you have not made money the entire year and you are just losing, you're not a profitable trader. And this is exactly what most of you don't get. So if we look at this quickly, so the year is just about to start. I don't know when you're going to see this video. So you're going to start off with your 50% win rate thinking that, okay, this is a good strategy, right? You'll get into drawdown, no problem. But then you'll also have winning streaks. This goes on and on. But eventually you will hit those 6 losses that I've told you earlier. Remember, 6 losses is the minimum that you can expect. This can go up to 7, 8, 9, or even 10 losses in a row. But eventually, that losing streak is going to happen. Loss, loss, 4 losses, 5 losses, 6 losses. Now, if your strategy works, then you will climb that up, and by the end of the year, you will be profitable. But people don't realize this. What this exactly is, right? So this entire movement, this is months of you just not being profitable. This is what all of you guys don't understand. This is not just a drawdown phase where you have gotten into drawdown. This is you not making money for multiple months on end. And it's not just that period where you didn't make any money. This is what most traders get wrong. From this point on, so you basically highest equity curve you have ever collected all the way to the point where you have recovered it, only from here on, you're keeping on making money. Everything in that pool, you have not made any money, and basically you are just sitting on your desk trying to recover all of your profits. And this is also not going to happen because your strategy doesn't work to begin with. But that's a different topic for now. So knowing that as a matter of fact, that you will be in a drawdown period for multiple months. Once again, this is all just backed off by data and not invented by myself. You can go and check this out yourself. Go ask ChatGPT, it will give you the exact answers. So once again, the system is not failing you, but you are failing the system, because as we have seen in the 50% win rate graph, the strategy is profitable, hypothetically. However, nobody wants to be in a drawdown for this long of period of time. So how are we going to fix our psychology without actually fixing it? Because then we can expect a high equity curve, which will just keep on going and going. Working on your psychology alone will only fix the symptoms. This will actually not get you profitable. So you need to work on the core problem that is keeping you unprofitable, which essentially is increasing your win rate. Now, here's a big thing. You don't understand risk management to begin with. Why do most traders risk 1% per trade? Now, before we're going to say anything, risking 1% per trade is not a bad idea per se, because when you're risking 1%, most of the times you will not blow an account like that. However, with whatever you are trading, you will blow the account eventually. The reason for that is because what we have just talked about. You're going to lose a couple of times in a row. So since your win rate is so low, you can't risk that much. But if you have a high win rate, then you can risk way more. This goes back to the old Monte Carlo. So this is basically showing the worst outcome compared to the average and compared to the best outcome you could possibly get with your strategy. Now, of course, when you're running a simulation, none of these is actually going to be at the bottom, and you're also certainly not going to get at the top. Your strategy is most likely be somewhere in between if it is actually profitable. Now you see how this range is very wide. So the highest point compared to the lowest point, this is a major difference in price. So how do we tighten this entire line up? How do we get an equity curve where the worst case scenario is still not months or even years of just constant drawdown? Once again, by having a high win rate. If your win rate is high, then most likely you will also not get into a drawdown period like that. So a lot of people ask me, with your strategy, you're only making pennies. No, I'm not making pennies. I'm making more than you simply because I'm not going to get into a drawdown to begin with. I'm risking 3 to 4% on a single trade. Now you might be saying, why? You'll blow the account. I am not going to lose the entire account, because losing 3 times in a row with a 95% win rate is probably not going to happen. Who's going to bet on a guy with a 95% win rate that he is going to lose 3 times in a row? Not me, at least. So, but what if I lose? This is also a very common saying. What if you lose a trade? All profit is wiped away. Now, firstly, not all profit is wiped away, and this is an example of a 100k account. You're taking a couple of wins, okay, then you'll take a loss. You'll take another set of wins once again. You will go on winning streaks and not on losing streaks with this strategy. And even midway, you're somewhere going to take a loss, you'll still end up in a net profit because once again, the strategy has such a high win rate. How does the strategy work that gives me a 95% win rate in trading? It's unbelievable, and you have never seen somebody actually having this high of a win rate. So we're going to break the strategy down, and you don't want to miss any of these steps. If you're going to miss them, then it's not going to work. Simple as that. So firstly, we want to start at the daily chart, and we want to ask ourselves, are we going for the previous day high or are we going for the previous day low? Now, how do we determine if we're going for the low of the candle or for the high? Simple as that. Do you see this is a big bearish candle to the downside? Where are we more likely to go? Of course, we are going to the downside and not to the upside. So from here on, we have already determined that we will go for the previous day low. What else can we spot on the daily chart alone? Now we can see that we have relative equal lows. If you are not familiar with these terms, watch the other videos. I have made guides on all of these terms. So our entire job on the daily chart is already done. And here we are already at the 4-hour chart. So once again, we have the previous day low, we have the relative equal lows. Where do we want to trade? Obviously to the downside. What else can we see on the 4-hour chart? And it's very systematical, it's mechanical, and most importantly, it's simple, what I've told you earlier. If you're making it complicated, it will not work. What are we looking for in price? We want price to go into this FAG and then trade lower. And even if we want to be a little bit more aggressive, we just want to take the trade as it is on the 1-hour chart. So at the 1-hour chart, what do we want to do? We want to go to 11 p.m. UTC standard time. Now I cannot go over everything in detail because else this video will be way too long. So from here on, what are we going to do? We are going to aim for the relative equal lows, and our stop loss is going to aim for negative risk to reward. Now for exact stop loss placement, any if you have questions, then leave them down below in the comments and I'll answer them. From here on, we're just going to take a trade and see how the trade is going to play out. This is not just something cherry picked that will never work again. Go back test yourself, you'll see that this happens a lot of the times. Simply because this is such a simple approach to the markets. We are not overcomplicating it, we're keeping it simple, and most importantly, it's easy. That's it. Now, I don't know if you're a futures trader or CFD trader. However, with this strategy, I have seen a lot of people come up to me and asking, how are you going to pass prop firm challenges this way? This is why I've created my prop firm passing evaluation service. If you have problems passing a prop firm challenge, no matter if you're trading my system or your system, I will pass it for you for a fee. And in case I fail the challenge, you will not only get the money back that you have paid me, but you'll also get the money back that you have paid the prop firm in order to get the challenge. So there's no risk attached to you. You'll get the money back you have paid me and also the prop firm. It is literally a no-brainer. So you know most reasons on why you're failing in trading. However, if you want to learn why 90% of traders lose 90% of their capital within 90 days, then click on the video which is in here because this will fully explain to you why are actually the traders losing. These statistics are not just made up. So thank you guys for watching. Like the video, subscribe to the channel, and see you guys next one.